In this video, I'm going to talk about the fastest ways to fix your trading. If you've been struggling with trading and it feels impossible to win, then make sure you watch this video because I'm going to go through 6 of my top tips for you to overcome and fix your trading as soon as possible. Okay, you can apply this and you will see results. Okay, and if you watch to the end, I'm going to drop a bonus tip at the very end, and I'm going to go into real detail with that one. And that one is a total game changer that you might not even be aware of. So make sure you stick around for that. Okay, so let's get started. Number one is you have to fix your nervous system and your psychology. Okay, these are old programmings that are running on default, old negative patterns. Okay, and this is the stuff that keeps making you FOMO, revenge trade, doubt, hesitate, um, get angry in the market, get frustrated. All of these things are just because you have these old patterns programmed into you from the matrix, from your parents. And I'm not saying that your parents were bad people. It's just the way it is. And we all have them. Okay. You're not born to trade by default. Okay. So therefore you have to do the shadow work and clear all of that out so that trading becomes easy. That is the first one. Okay. And if you want to work on that, check out the link in the description. Number two, it's so simple, but then a lot of people can't do it. But it's basically stick to one trade per day. You see, if you only have one trade or one chance to take a trade for the day, you are going to make sure that that's going to be the best trade. You're going to take the best trade setup. You're not going to just have like all these second chances to fix your trade if it doesn't go according to plan. Okay. And having one trade per day stops you over trading. I actually believe that anything more than one trade per day is over trading. There's no reason to take another trade if you won the first trade. See, if you won the first trade and you try to take another trade, you're being greedy. And then because you're being greedy, you're not thinking straight. You're not thinking logically. And that is dangerous. And also on the reverse side, if you took a loss and now you're trying to fix that loss, then that is your ego. It's revenge trade. You're trying to get back at the market and fix something. Okay. And going beyond one trade stops you from reviewing and journaling your trade. So you never really learn anything because you're in a rush to get into the next trade. So you might say, oh, I've got 3 or 4 trades that I want to try and get into on the New York session, and I'm just going to rush through them all. Then you never really give any trade the best thought before the trade, like, so the best plan, and then also the best review. You don't review the trades because you're just in a hurry. So stick to one trade a day. It's so easy to say and it's very hard to do. Okay. And it's hard to do is because the way your nervous system has been programmed, the way your psychology is. That's really what it is. Okay. So you have to work on that. Okay. Number 3 is use the same amount of risk on every single trade. Okay. Until maybe when you go into a drawdown. If you go into a negative drawdown, then you're going to have to, size down on your risk. But even when you're sizing down, make sure you use the same size, same amount of risk. So let's just keep it simple, right? For example, if you're going to risk 1% on a trade and then you lose that trade and now you're in a fear mode, your brain is like all over the place and you're not sure and you're hesitating about your trading, right? Then that means the next trade you're gonna like use 0.5% or 0.25%, right? Let's just say you use 0.5% and then the next trade was a win, but then because you used 0.5% instead of a 1 whole%, you only just did a break-even trade where you should have broke even and got more if you just used 1%. You see, so you have to use consistent risk. This is important because this is why break-even traders are stuck at this stage. They know how to trade, but then their emotions get the better of them and they're not using the same consistent risk. So make sure you use the same risk for the entire month. Okay? That was number 3. Number 4 is the moment you wake up in the morning, the first thing you should do is Go and look at the charts after you've had your morning coffee and your cold shower and your meditation and all of that. But go and open the charts when your brain, your mind is fresh and clear, and make a trading plan for that day, right? You're not going to have to like open the chart and start trading, okay? That just means that you're addicted and bored and you don't know what you're doing and you have no discipline. But open the chart and make a trading plan for your upcoming trading session. Okay. You should know if you should be trading that day or not. And if you are going to be trading that day, you should be able to have a plan so that when the time comes, you don't, maybe the time comes and it's like in 10 hours from the moment you wake up. Like in my case, like if I wake up at um you know 5 a.m., okay, New York doesn't start until 8 p.m. for me, okay, but I still have a plan by 6 o'clock in the morning or 7 in the morning. I already have a plan way ahead of schedule for New York, 12 hours ahead of schedule, right? I already know if I'm going to even hang around and take a trade or not, you see. And if I am going to hang around, I know exactly what I'm going to do when the market opens. And if it does exactly as my plan, then I get in on the trade, you see. So make a plan. It's very important. And then stick to the plan, okay? That was number 4. Number 5 is have a checklist. Your life will be so much easier if you just had a simple checklist, okay? That's how you're going to get consistency. That's part of your process, right? Have a simple checklist on your trades, and your checklist, when all the boxes get checked off, that's your A plus setup. And if it doesn't all check off, then you don't have an A plus setup. You shouldn't be taking a trade. Simple as that. There's no need to take a B setup. Why would you want to take a B setup, right? Stick to the A plus setups. Less is more. You don't always have to trade every day, okay? So checklist will save you a lot of frustration, a lot of heartache, and it'll get you moving in the right direction, okay? It'll get you consistent, okay? Number six is journal. Journal every single trade. Win or lose, you got to journal, okay? If you don't journal, it didn't happen, okay? There is a lesson in every single trade. I guarantee you, whether you win or you lose, there is something you can learn or confirm. Do you understand? So you need to be journaling this. And this is boring work because a lot of people, their dopamine is hooked on social media or their short form content, and they'd rather be doing something else than sitting down and journaling a trade. But it's the journaling that is what is going to make you good or better. Do you see? The magic is in the journaling. You will learn so much about yourself and your trading if you just journal. It's a way of getting your thoughts and your experience out of your head and onto something like outside of you, so you can look at it and go, okay, cool. This is what happened, this is what I learned, and then you're gonna have something solid to think and ponder for the next few hours, and that's going to sink into your brain. And then if you do it enough times, you're gonna notice patterns. You're just gonna get better. That's the only way you're gonna get better. Okay, so if you've made it this far, congratulations. Here is the bonus one, okay? And I really like this one. When you open your charts, right, the first thing you should be doing or asking yourself is this a trend or a chop? Trend or chop? Make this a mantra, okay? Trend or chop? Trend or chop? Okay? Is the market trending or is the market choppy? Okay? And I want to go a little bit deeper. Trend or chop on the weekly or the daily, okay, on the higher time frames. Now, there is this stigma in the markets where people say, oh, stick to one pair. One pair is all you need. You need to master one pair and then you'll be good. I'm going to disagree with that categorically, and I'll explain why to you right now, why that is a bad idea, okay? Because you're so focused on the one pair that you don't even know when you're in a trend or a chop on the higher time frame. So you find your one pair and you start trading it when it's in a trend. okay, on the higher time frame, and it's all going nicely. It's all working out. It looks good. So now you think, oh wow, I found my pair. Oh, I'm going to do this forever. I'm going to trade this forever. And then you're not paying attention to the higher time frame. And then all of a sudden the weekly comes into a chop. It starts to consolidate, and it's in consolidation, right? Now all of a sudden that pair doesn't work. No strategy is going to work during a chop, right? What is happening when there's consolidation over a long period of time on the weekly and the daily? That is institutions getting into position, right? Because they're getting into position, buying positions in anticipation of a future breakout. Whether it's to the upside or to the downside, nobody knows. Only the institution knows. You're not a bank, right? So that is also manipulation, because they're shaking people out and they're taking positions and nobody knows what's going on because it's consolidation. There's no clear trend. So you should not be trading that. But then, because these day traders are so fixated on, oh, my pair is so and so, I trade the Nasdaq or whatever, or I trade Euro USD and that's all I do, or I trade oil, right? And then when it goes into a chop, they're in denial. They don't know that they're in a chop. And they're so addicted to trading, they want to keep trying to trade and make it work, where they should just be staying out. So I always say, you should have a handful of favorite pairs to trade throughout the year, right? So if you have a few good pairs that you like to trade and work with, then those are your ones that you work with, right? And you should be looking at them all. So the ones that you open and it's clearly in a chop, then you just stay away from that. You don't touch those, right? And you go with the ones that are trending, because the trend is your friend. Trust me. Okay, if it's an uptrend, you got higher highs, higher lows. If it's a downtrend, it's lower lows and lower highs. It's really that simple. Okay, you don't want to fight the market, because when the market is in a trend, that's the institution. In the higher time frame, like weekly and daily, when those start trending, that's institutional order flow. Like, that is the big money making the moves. You want to go with that. Do you understand? You want to be trading with that. You don't want to be arguing with that. And then when those guys are consolidating, you don't want to be messing around with them either, because there's no telling what they're going to do. You're not a bank. Do you understand? So those are my golden nuggets to help you fix your trading if you're in a bit of a mess. Okay, just apply those, and that's going to help you a lot. If you're new to my channel, go ahead and like and subscribe. Drop your comments below. Let me know which one of these resonate with you the most. Until the next video, you're on your own. Take care now. Goodbye.